individual may have been in the marketplace for anywhere from 8 hours to 3 days in some instances. So in other words, oftentimes when we look at these programs, we see the performance first. We become enamored with these huge sums of money, or relatively large sums of money that individuals were able to take out of the marketplace, and our belief is that we're going to be doing that, once or twice a week on a weekly basis, and that we're not going to have to spend countless hours in front of our computer. When in fact, first and foremost, these are unique, exceptional occurrences that happen. You may see 1 or 2 a year. The other thing is when they do happen, you're going to be in the marketplace for an extended period of time. And one of the things is most individuals do not like to be exposed or be in the marketplace for extended periods of time because it creates a sense of anxiety for them. What most people realize is they'd like to be able to consistently make profit, they'd like to have regular daily cash flow, and they like to do it in a relatively short period of time. One of the benefits of our trading program and the training process is it's a minimal amount of time commitment. The reality is a lot of our trades happen in less than 30 minutes. The average time that we're in a trade is typically under 80 minutes. The trades that occur in the morning happen a little more frequent or faster. The trades that occur in the afternoon take a little longer, and so that's what creates that average, but allows, once again, an individual to spend a minimal amount of time in the marketplace. So when you're evaluating the processes, one of the things you want to ask yourself is would you prefer to be trading for 2 or 3 hours a day, realize potentially the same profit objective that you could being in a trade for 8 to 10 hours, and spend less time making more money? There's an old saying in trading, it says, don't let your greed exceed your need. And that's oftentimes what happens is individuals feel that, well, I'd rather spend 10 or 12 hours a day in front of my computer because I want to rack up all these profits. When the reality is one of the common reasons why people are not successful is they spend too much time in front of their computers. It's a known fact that the more time you spend in front of your computer, the higher likelihood you have of making a bad trading decision. It's very similar when you drive a car for an extended period of time. When you go out and you take a 5-hour trip in your car, the first 30 minutes to the first hour, couple hours, your attention, your ability to react to situations is far sharper than it is in hour 5 or hour 6. And trading is no different. In other words, when we drive for an extended period of time, we experience what's called highway hypnosis because we are seeing the same thing over and over and over. And so in trading, the same thing happens when we watch price on our computers for extended periods of time. Reality is we have a tendency to read into the markets. We make bad trading decisions the longer time we spend in the marketplace. We have a tendency to give back profit. So anytime we can minimize the amount of time we have to spend in front of our computers, minimize the time that we can be in a trade, actually over the long haul means we have a higher likelihood of consistently making profits. Now I went back to all 4 charts because I thought potentially we have looks like a potential of a long setup developing over here on our on our dollar versus Japanese yen. So I just want to go ahead and notate that there and see how things start to develop. And then we'll come back up here and we'll start to talk about the planning process. So we discussed the first common pitfall why people are not successful is they gravitate to technology. And it's natural. Let's face it. We live in a culture now where technology creates a lot of solutions and efficiencies for us in other places in the marketplace. And then we're in a hurry-up society. We want immediate gratification. We want our opportunities to yield success yesterday. The reality is a lot of these programs appeal to our sense of immediate gratification. So when you're out there evaluating programs, one of the key things that you have to do is you have to make sure that you're using the right criteria to evaluate a program. If you are evaluating, for instance, a fund manager, performance would be very important for you. You'd want to know what percentage of drawdown he has. You want to know what percentage of successes he has. If you're looking at a trading system, those terms are going to come into play and become very important. When you're looking at a training process, you need to evaluate the process because if the process makes sense, then naturally the performance is going to follow the successful performance. So it's important to remember that, and I'll elaborate on that as we move forward. But once again, it's in all things. What I ask is when people listen to this information, please focus on also the part where we discuss the training process, because the process makes sense because we all learn in the same fashion. And so the other category of people that I mentioned were those that consistently take profit out of the marketplace. And those individuals have a consistency in their trading. And the key correlation to why I see that they were consistent and they're able to consistently take profit is those individuals go out and get the correct training and the correct understanding of how to interpret price in the marketplace. Those individuals go out and they get the whys and hows and the foundation of what makes price move in the marketplace. Because there's a couple of realities here. Reality number one is what is a chart? A chart is simply a roadmap of price. Once we get the correct understanding of how to navigate that roadmap, then it would just make sense that we're going to be able to effectively understand and interpret price. Reality number two is price is truly the only predictive indicator we have. Price is truly the only leading indicator we have. I'm amazed at how many people still are not under the awareness that all indicators are lagging. Stochastics, MACDs, whatever type of moving average you'd like, these are all lagging in information. And they too perform best on large time frames. When you look at indicators, most of the indicators were developed to trade in markets to trade in an 8-hour trading day. Forex is open 24 hours a day. Very volatile market. Indicators create a lot of false signals in this marketplace. Indicators trade best on large time frames as well because of this. There's so much volatility. A lot of false signals. But the reality is all indicators are lagging. Those that are consistent and those that are successful use price as their primary indicator. In fact, I call price the ultimate trading indicator. You know, the reality is if you could write a piece of software that could have successfully harnessed the market, there would be no market. I mean, think about it. In the Forex market is the largest market in the world. It's the most popular market in the world. It's the fastest growing market in the world. That's why it's a prime market to trade in an online venue. Over $2 trillion a day in this marketplace are traded back and forth against each other in this seamless 5-day-a-week, 24-hour-a-day trading session. Think of the amount of activities and individuals, the billions of people that are involved in this marketplace, and think of what type of software program it would take to be able to write the code to be able to effectively understand all of these different nuances. And that's why when we look at price, price tells us that story. And price is truly the most predictive indicator, and it's important to look at that. So a key correlation to why people are not successful, they gravitate to technology, indicators, systems, what have you, and there's no consistency in their process. Key correlation to why people are successful is those individuals go out and they get a clear-cut understanding of what makes price move in the marketplace. When I say a technology-based trading application, I said that there is a specific place that technology has in the market, and that's where technology, one, trades on larger time frames because price is smoothed out. Two is it trades under very specific market conditions, and three, it trades on an infrequent basis. The benefit of a trading methodology is we can trade it on multiple time frames if necessary. Here at the Trading Institute, we trade on a 10-minute candlestick. Excuse me. We specifically use a candlestick chart because it's easy on our eyes. We do not use any candlestick patterning in our trading methodology. I stress that because as soon as people hear candlestick, they run out and want to buy a book on candlesticks because they think that that's what we're trading, and that's not what we do. We specifically use a candlestick chart because it's easy on our eyes, it's easier for us to see the trading setups, and we use a 10-minute candlestick because it represents the prime time frame to effectively make maximal profit in a relatively short period of time, minimizing the amount of time we spend in front of our computers. In other words, if we scale down to even a 5-minute candlestick, there would be too much price noise. It would be harder to interpret the price setups. If we move to a 15-minute candlestick, now all of a sudden we're going to have to spend longer amounts of time in front of our computer. One of our